Welcome back to Not Your Father's Accountant. My name is Igor and I'm a CPA. Have you ever procrastinated filing your taxes because you know it's going to take days to go through your receipts and get something to your CPA? If you've ever found yourself buried in paperwork or just feeling overwhelmed at the end of the month, at the end of the year, in the middle of tax season, you're not alone. Today, we're going to be tackling a crucial topic, creating an efficient monthly accounting process, also known as an accounting cycle. And this is going to be focused on small businesses and startups. This process or system helps make sure that you're keeping up with your books throughout the year instead of waiting until the last second to get them updated. It also helps you make sure that you reduce the chance that you have errors or fraud going on. Plus, I've got some free resources for you. We'll talk about them here in a little bit, including a sample checklist and some templates to get you on the right foot. So, on that note, let's get started and jump right in. So we're going to talk about 6 things today. What is a monthly accounting process? Essential software and tools, internal controls and their importance, documenting and delegating, reviewing financial statements and KPIs, and then updating your process over time. Let's get started with the first one. What even is a monthly accounting process? So what does this entail? In essence, it's a systematic approach to managing your financial records on a monthly basis. This process ensures that your financial data is accurate, complete, and up to date. And let's jump into a few core components of it. The first one's going to be journal entries, then we're going to talk about accruals and deferrals, and finally reconciliation. So journal entries, or categorizations if you're using a software like QuickBooks Online, are the method to record all the transaction into your general ledger, which is basically a running list of everything that's going on from a financial perspective in the business. And this makes sure that you have every transaction accounted for and recorded accurately throughout the year. It's important to double check these entries because if they're wrong, the resulting statements and reports and KPIs that you get out of them are also going to be wrong. Now let's move on to accruals and deferrals. This usually applies to accrual-based taxpayers, not cash-based taxpayers. Odds are you're a cash-based taxpayer, which is a lot easier to maintain because you're just recording revenues and expenses when the money actually switches hands or gets charged to your account or comes in. If you're accrual, you're a little bit more accurate, you have a little bit better insights into what the business is doing and how the timing of things works out, but it is a lot more work to keep track of it. Generally, I recommend starting on cash, and then once you grow, eventually you can make the transition to accrual. And then finally, it's reconciliations. This is checking your bank statement and matching it to your internal records and making sure that everything aligns, making sure you have the same balance in both systems. And this is so that you can help catch errors, discrepancies, and potential fraud early on. It's how you maintain the financial integrity of your business bookkeeping. So make sure to perform those reconciliations as soon as those bank statements comes in. Now, I've created a sample monthly checklist to help you keep track of these items. You can download this checklist and the other resources we're going to talk about later on in the Google Sheets file linked in the description below. So set a regular schedule for these tasks. That's going to be the thing that keeps you accountable first and foremost, like every Friday morning or the first week of each month. That's how you maintain consistency and accuracy. And that prevents last-minute rushes and keeps your financial data accurate and up to date. Next, let's jump into software and tools. These can help you transform your monthly accounting process. The right tools can automate, reduce errors, and provide valuable insights. So let's talk about accounting software, spreadsheets and doc management, and then integrations. Accounting software is going to be like the QuickBooks Online, the Xero, the FreshBooks of the world. They all have their own place. They all have their own price points. They're all good for you. It's just a matter of setting up properly and actually using it. Now, spreadsheets and document management, this is going to be a little bit different because you can run on spreadsheets. I wouldn't recommend really doing it past 100K in revenues because at that point, you've got the money to support these systems. You've got it before then. They're not that expensive, but it'll help you get to the next level faster instead of having to build out spreadsheets for everything. Don't reinvent the wheel. But make sure that you have good document storage. Google Drive, Dropbox, OneDrive. Keep everything documented. Keep everything stored in one location so you have it if you ever need it. And then integrations, if you're using different softwares, a CRM, an ERP, right, HubSpot, Salesforce, SAP, NetSuite, make sure that it connects to your bookkeeping software. It'll save you a bunch of time. It'll make your life easier. And make sure that it actually connects properly. I've seen plenty of situations where it doesn't, and then we have to go through and undo a million transactions trying to get back to the root cause. Now, choosing the right software is really just going to depend on your business size, industry, and specific needs. Integration is going to make sure that you have consistency and accuracy and that the different systems are talking to each other consistently. You've got to find what the right balance is for you. Now, in the file below, I've got a template monthly bookkeeping file. It'll help you get started. Anything past 100K in revenue, like I said, you need to make the investment into one of these softwares. Unless you're an Excel wizard, but even then, it's not a great use of your time. Most important thing here is, no matter what you use, no matter how you use it, make sure that you're using it regularly. Prevent the year-end feeding frenzy. Let's go to number 3, internal controls. What are they? They're essential measures designed to safeguard your financial data. It's stuff like segregation of duties, authorization requirements, and regular audits, right? Now let's dive into these. Segregation of duties is making sure that no one single person has control over an entire financial transaction, right? Nobody should control the transaction from start to finish. The same person that receives the mail should not be posting the payments for the invoices. They have too much control in that process. Authorization requirements are making sure that bigger transactions, more significant ones, get approval from somebody else. Like if you're spending over $1,000, somebody should have to sign off on that. Or if you're bringing in payment from a customer for $30,000 or more, you should have to have 2 people sign off on that receipt. And then audits aren't just the stick, it's also the carrot, right? Yes, you can identify some issues, some weaknesses with audits. You can also identify opportunities for automation, for improving your accuracy, for improving your operations. Internal controls are going to be one of the most lacking areas I've seen in small businesses and startups, right? It's not an easy area to tackle. I've included some resources in the workbook below on a segregation of duties template so you can get started, an audit checklist so that you can get started. It'll get you the ball rolling so that you can move forward and keep it in mind and in practice. Now let's go to number 4, my favorite, documenting and delegating. Documenting and delegating is essential for scalability. Detailed documentation makes sure that you're performing tasks consistently, and then efficient delegation lets you focus on strategic growth instead of getting bogged down in day-to-day operations. When you start your business, yes, you need to wear a lot of hats. You need to send out the invoices. You need to reply to the emails. Eventually, that's not the best use of your time. You bring on an admin. You bring on somebody that's got experience in AP, AR, accounts payable, accounts receivable. They can handle it. You can focus on the growth. This really boils down to 3 areas: detailed procedures, delegation, and training. You got to start by creating SOPs, standard operating procedures, and checklists for each tasks in the accounting cycle, like reconciliations, like journal entries, like financial reporting. This will make sure that everyone's doing the same things at the same times in the same ways, right? It'll get your team members up to speed quicker. Once you've got that documented, you can delegate. You can assign specific responsibilities to team members based on their roles and expertise. Proper delegation makes sure that you're completing things at the right time with similar expectations. And then you can train. You can provide training. You can do it in-house. You can bring somebody in to do training that's got a lot of experience. But well-trained employees are more likely to perform tasks accurately, adhere to procedures, and also stay in their job. You won't have to hire and fire as much if you make sure that the expectations are clear from the start. And that'll save you a bunch of money, because hiring and firing takes a lot of time, effort, energy, and resources. In a nutshell, systems and frameworks are going to be key to growing and scaling your business and transitioning from being a manager to a CEO. You cannot delegate what you cannot document, and you can use different task management tools like Asana, Monday.com, etc. to track the progress of this and to ensure accountability. But don't forget, you got to document, but you got to update the documentation and make sure that you're reflecting any changes in processes or responsibilities. On to number 5, reviewing financial statements and KPIs. This one is a jackpot. Reviewing your financial statements and KPIs, or key performance indicators, is going to be essential for assessing your business's performance. How do you know if you're actually doing well? Here we're going to talk about 3 things: financial statements, the big 3, key performance indicators, we're going to focus on a couple, and then benchmarking. So financial statements, the big 3 are balance sheet, income statement, cash flow statement. Balance sheet is going to show your business's assets, liabilities, and equities at a specific point in time. Income statement is going to give you detail on your revenues, expenses, and profits over a period of time. And then a cash flow statement is going to track the flow of cash in and cash out of your business over a period of time, right? That's important, obviously, because you want to know if you're going to have the money to make payroll. You're going to want to know what's going to happen when you hit a slow season. How are you going to keep the business going? Key performance indicators, or KPIs, these are going to be the little metrics, the little dials on your dashboard that tell you, are things going good? Are things not going good? Do we need to change direction? How's that ad campaign going for us? Do we have money to make our note next month? What are we doing here, right? The biggest 3 that I like to focus on at the get-go are revenue growth, profit margins, and liquidity ratios. Revenue growth, pretty self-explanatory. How's your revenue growing over time? Or is it growing over time? If so, why? If not, why? Profit margins are going to tell you what percentage of that revenue exceed your costs. It's telling you, are you making money on the work that you're doing, or are you a charity? And then liquidity ratios are going to show you your ability to meet your short-term obligations. Are you going to be able to pay your suppliers? Are you going to be able to pay your bank note? Are you going to be able to pay your employees, right? That's how you can track all of that. Now, the biggest one here is going to be benchmarking. And this is going to be taking all of what we just talked about with the financial statements and the KPIs and figuring out what makes sense out of it. It's going to be comparing your metrics against your competitors and your peers to see how you compare, to see if you're underperforming, overperforming, or you're performing on the same level as they are. This can tell you if you're doing something really awesome that they're not and you have a secret sauce, or if they're doing something great and you're not and you're falling behind. It's a good way to make sure that you're keeping track of what you should be doing. Now, I say comparison is the thief of joy, but not in business financials. Comparison is the product of joy here. This is what's going to tell you if you're doing well or you're not, and will tell you which direction to go into. Now, in summary, financial statements are important, and it's pretty easy to get to them with a good accounting software. You can create them manually. It's going to take a while, right? The Google Sheets file is going to include a simple P&L template that works with the bookkeeping tab, so you can do your books and it'll automatically generate a simple P&L, profit and loss statement, for you, also known as an income statement. Remember, you got to review these statements regularly, you got to check your KPIs regularly, and you need to know how your business is doing. It's a pulse check. It's knowing how are things going. Compare against the industry benchmarks. Look at your competitors. What are they doing? See how you're doing. That's going to give you areas of improvement, and that'll let you make informed and timely decisions. Let's go on to the last, and honestly, one of the more important processes, taking what we've been doing and updating it over time. Now, I say this to our clients all the time. Your books on day 1 should not be the same as your books on day 365, should not be the same as your books on day 3,650, and so on and so forth. Your business grows, your books need to change, right? You maybe need more detail or less detail. Your accounting practices need to adapt as well. Now, this isn't about making big overhauls and investing a bunch of time, money, and bringing on consultants that charge you buku bucks. No, this is about making small incremental changes over time. Then that's going to be a lot easier. It's going to be a lot less disruptive. It's going to help you maintain this attitude of Kaizen, or of continuous improvement. Here's how we do this. 2 ways. Periodic reviews, continuous improvement. Periodic reviews are going to be scheduling regular reviews of your accounting process. This might be once a quarter, once every half year, once every year. but it's going to be when you sit down, you look at what you're doing, and you figure out, does this still align with how we operate as a business? And then from there, you go into continuous improvement. It's taking those reviews and incorporating feedback and lessons learned from every cycle to refine your process and to grow. Continuous improvement lets you adapt and lets you stay nimble and on your feet, right? And it lets you stay ahead of potential issues. And it's easier to improve 0.5% or 0.25% every day than it is to do a 50% shift over the course of a couple of months, right? So these are going to be what helps you maintain this robust accounting system. And remember, these small changes over time are going to be so much more manageable and way less risky than any major overhauls that you plan. So to wrap it up today, we've covered everything from defining the monthly accounting process to selecting the right tools to implementing internal controls to documenting and delegating tasks to reviewing financial statements and KPIs and to continuously improving your process. And we did that in less than 20 minutes. And the most important thing is you need to think of this as how can I grow my business as opposed to more boxes to check off, right? Yes, it's going to be boxes to check off initially. It's going to take up time and you're going to sit there and you might bang your head against the wall once or twice. But implementing these practices will not only save you time in the long term, but also give you more accurate and reliable data to work off of. You can be more strategic. You can take that manager hat off and you can put on the CEO hat. And that's what will get you to the next level. Now, if you've enjoyed this video and you found it useful, don't forget to give us a thumbs up and subscribe to Not Your Father's Accountant for more insights and tips on managing your finances and running a successful business. If you have any comments, feedback, or suggestions, drop them below. I'd love to hear from you, and thanks for watching. I'll see you next time.